Good morning, traders. It is Monday, September 8th, 2014. It's 8 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. As always, probably notice that the routine is always the same, which is part of the habit cycle that I've talked about in the past on Big Mike and others. Very important to follow the same pattern. Of course, nothing's static. You adjust the pattern as is necessary over time. Trading plan and trading routine are a living document, so to speak. So let's start with the news. German July trade surplus widens to 23.4 billion euros versus 16.8, which is a very large beat for the trade surplus in July. Good news out of Germany. The Ukrainian government says rebels violated the ceasefire 5 times since yesterday. And then in Scotland, this is a new thing that's coming on deck for the global market. It's been going on for a while in the UK. A YouGov poll saw that the Yes camp is now leading in Scottish independence. Polls are 51 to 49. There's a 2-point lead for those wanting Scotland to secede from the UK. Last week, the Yes camp was 6 points behind, and a month ago, the Yes camp was 22 points behind. 22 points, and now it's leading by 2. So it looks like Scotland's taking the steps to become its own independent country. If you trade the any pair that has to do with the British pound, you might want to be paying attention to this. Fed's Plosser sees undeniable progress in the economy, says must change the statement language to prepare for a sooner than expected policy change. Fed's Plosser is a voter and is a hawk. The Wall Street Journal says the SEC are developing rules for mutual funds and hedge funds, including stress tests. So how does that affect us? The fact that the SEC is looking at mutual funds and hedge funds the same way banks are being looked at, you might see a reduction in positions and things like that as these rules come out and these stress tests are done. You might see funds having to liquidate portions of their positions to meet the new rules. So we'll see that in our index trading and so on. China August trade surplus is bigger than expected, 49.8 billion versus 40 billion. The EU has now agreed that a new package of sanctions may be implemented on Tuesday. This will be voted on today. A new packet of sanctions against Russia. So this saga goes on. Poroshenko's aide says that 5 NATO members, including the U.S., will provide weapons for the Ukraine. This statement was swiftly denied by 4 out of the 5 members of NATO. So I don't know what's going on there, but it seems like Poroshenko and his crowd are not able to keep Allied secrets. The Spiegel says that several Airbus executives will face insider trading hearings next month. Looking ahead at today's schedule, very, very light calendar. 10:30 Central, we have a 3-month, 26 billion, 6-month, 23 billion auction. That's just an ongoing auction. And then at 2 p.m. today, is it 2 or 1? I think it was 1. Let me check. No, it's 2 p.m. Central today, consumer credit. Since it's Monday, let's take a quick look at the week, the highlights of the week. Tuesday, tomorrow, we have the Bank of Japan minutes, UK trade balance, industrial and manufacturing production, U.S. API crude oil inventories, which happens right after the close, Fed's Tarullo and ECB's Lycanen speak, and then a 3-year note auction. Wednesday, U.S. Crude oil inventories and New Zealand rate decision. Bank of Japan's Iwata, ECB's Prate, and 10-year U.S. 10-year auction. Thursday, Australian, Chinese CPI and PPI, German CPI, ECB publishes its monthly report, U.S. weekly jobs report, initial claims and so on, natty gas, and then we have ECB's Lautenschlager speaking, as well as Kerr and Draghi on Thursday. And as far as supply, we have a 30-year bond auction and a 10-year TIPS announcement. On Friday, UK construction output, US retail sales advance, import price index, and University of Michigan confidence, as well as ECB's Draghi again on Friday, Kerr as well, and Constancio at a Eurogroup meeting, and then the EU has a 3-year LTRO repayment. So the calendar's moderately busy, but not exceptional this week. So we'll keep an eye on that. Of course, layer on top of that, the geopolitical news, and we might see movement. Let's look at last week as a whole. So remember Friday we pushed to 2001.75 2 Fridays ago, and we finished with a very poor high at 2001.75, touched twice. And then Monday was a holiday, Labor Day in the U.S. Tuesday we have somewhat of a double top, and then the market sells off to test the entire range of Friday. Notice the point of control is in line with Friday in value. And then on Wednesday, we gapped up to 2008.50, which is new all-time highs on the day session. And then we sell right back and put the point of control right in line with Friday, Tuesday, just trading the same information as we have. So, and then Thursday, we open in range, test the 2010 for new all-time highs on the day session. I think the night session's all-time high is 2011. And then we sell right off, a nice little sprinkling down. And then the market's not able to push that far. I expected it to get back down towards 1986, but this is a pretty good range for one day for this product, given how slow this summer's been. And then on Friday, we came back in and we opened in range, tested below to 88.25. Remember, the last low in this area is 88 here from 2 Thursdays ago, and then the market rallies to close very strong. So I want to talk about Friday a bit. So that's how the week played out. We had essentially balance on 3 days. We tried higher and could not sustain. We moved away from the new accepted value. We moved away from it by the end of the session, which is fairly bearish for the ensuing session. And then, so this is an impulsive move down here from 2010 to 1990, about 20 points, and it did not look like it completed. The expectation was for it to push to about 2000, 2001, and then to rotate back down and make a lower low, and it did. It made the lower low to finish this impulsive move with a continuation move down, and then the market found buyers and rallied back up on Friday. But the closed on Friday makes very interesting. So here we go. Here we are looking at Friday's action. A nice clear opening swing right here, 94.50 to 97.25. We could not close the closing gap at 97.75, and we test lower, so we made that lower low, which was expected, and then we get right back into the opening swing. Once we get into the opening swing, there's a high probability that it tests the other side, 97.25. There it's fighting it. Very difficult trade. This looks like it's tried again, made a lower high and is failing down, but still what we have is the fact that the market is taking back the prior day's range, Thursday's range. So not falling for that trick. Not falling for that trick, even though it keeps making lower lows here. So there's the lower low. So once it breaks through and falls below the prior day's range, this looks pretty bad for the idea that we'll go to 2001, which was the primary hypothesis. And then what it does next is it finds the buyers and gets right back into the opening swing. So now we have a test and a retest. Even though it's a lower low, we have a test and a retest, but it takes over the mid VWAP and it pushes back into the opening swing. So now it has a lot more energy from below to break higher. Closes the gap right here at about 11 a.m. Central, and then from there it finds really decent buyers. Look at this delta here. It finds really decent buyers, and the expectation is to push initially 2003 and a quarter, which it got right here to the tick, 2003 and a quarter for a 2000 rotation, gives us 3.25 point rotation, comes right back, and then continues to 2005, which was an old measured move, and then it makes a high of 2,650. It closes near highs on a neutral day. So this is a neutral extreme day type. A neutral extreme day type, generally this marks a change in sentiment. The thing that catches my eye more is the fact that the point of control, you see this pink line coming up here, that tracks where the point of control went. So this line is basically saying the point of control dropped. It dropped to the bottom here, to the bottom of the day, and then it rose up, came back, dropped again, and then it basically was flat at this price. So you have a three-pronged high volume node, which makes the point of control bounce around a lot like this, from there to the middle, and then it moves up at the end of the day. So to me, it seemed as a pretty high probability that the overnight high would be taken, or this 2,650 would be taken. But then you look at the overnight session, and it only took it out by a tick, which I think is suspect. The expectation is that we would likely push to 2,875 to this prior point of control from up here, but it was not able to do that. To me, that just looked very suspicious. So look at how it did that. So it opens right against the high to 2,650, and it goes one tick failed auction, finds sellers immediately, and is basically sideways for the entire session. To me, as long as it holds this LVN zone here between 2,000 and 98.75, then it's likely to continue higher, and 2,875 is likely to be the next target. So that's my primary hypothesis for today. We're opening in value in range. We're opening in value in range here, and as long as the market does not take back these LVNs here, then we're looking at new highs. So I've put in, let's extend this. I've put in I've extended the microcomposite here. 98.50 needs to hold for the buyers to stay dominant. Remember, we had these 3 days of points of control that are on top of each other. The market loves this area as a decent value, and that's what I'm looking for today. I'm looking for this area to be defended by buyers and for it to turn back up to 2,005 and a quarter. I expect the overnight high to be taken, 2,875, and then we can higher into targets. So we've been in balance here since the 21st. Pushed 2,275, pull back to 88, pushed to 2010, and been sideways. Friday really tried hard to push through, but it ran out of time. So when you look at this profile, 98.50 is key. We have a couple of LVNs plus this microcomposite point of control. Here we are, 2,003 quarter right now. So again, the expectation is for the market to try to push lower, and then to find buyers, and then to push through and carry itself up to the next target up, which is 2013.50. The targets above are likely to be 2005 and a quarter, 2008 75, the high 2010, and then 2003 1350. That's the primary hypothesis. The secondary hypothesis is that it opens, it tries to push to 2005 and a quarter, attains it or stops short, and it finds sellers to immediately drop back to 99 quarter, 98.50, chop, 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 and then start to slip through into the prior day's OS to retest this region down here. That region down there is minor HVN on the composite here. This stuff, this yellow area here, for more chop. So I expect it, if it does drop, I expect it to be fairly choppy below. I don't expect it to slip through like it did on Thursday. Okay. And then as far as again, as far as additional headline risk, you just need to keep an eye on the Ukraine situation. There's a ceasefire there that could turn ugly again, but the story's getting long in the tooth for this market. The market's attention span is very, very short. But anything that happens there affects Europe tremendously, and will therefore affect currency pairs, which will therefore affect how trade occurs around the planet. So you need to pay attention to that. The Iraq situation, very quiet, lots of talking by Obama, and apparently by Wednesday they'll have a plan for how to control ISIS. Some interesting articles on the inception of ISIS this weekend, where it came from, and I think the U.S. has its hands dirty with that. So we'll see what happens there. Just keep an eye on it. Just make sure you have a good news feed, or you know, if the market moves all of a sudden, it seems like it's moving illogically, don't try to hold on to a position and finagle your way out of a position. Just take your losses and mitigate your risks so that you can reassess. It's probably news. The market tends to move away quickly when news occurs, but it tends to more often than not, it tends to return. But that is not good risk control, because if it does not return, then you're throwing away a lot of your account. I'll leave you with that. Good luck, and watch your risk. I'll talk to you tomorrow. Take care.